Hello student, today we discuss our next topic, that is interest on capital. In previous class we discussed interest on drawing and today we start interest on capital. Let us start. First we discuss the meaning of interest on capital. Interest on capital allowed to a partner is a compensation to him for capital contributing by them into the partnership firm in excess of profit sharing ratio at agreed rate, which is mentioned in partnership deed. Now the main thing is at what amount we charge our interest. Interest on capital is generally calculated on the opening capitals of the partners. If in question closing capital is given, then opening capital will be calculated by adding or subtracting all those items which were earlier added or subtracted from the opening capital. The opening capital will be calculated first by using the following formula. Opening capital is equal to closing capital plus drawings plus capital withdraw during the year by partners plus interest on drawing minus additional capital introduced by partners during the year minus interest on capital plus losses minus profit during the year. If additional capital is introduced by a partner during the year, interest is allowed on it for the period it remained in the business. If a partner withdraw permanent capital during the year, interest will be calculated on the balance amount. Now we have certain provisions, rules regarding interest on capital. Let us start to discuss these rules. First case, when the partnership agreement or deed does not have a clause or partnership deed is silent about the interest on capital, in that case interest on capital is not allowed. In second case, when the partnership deed provides for interest on capital but is silent as to the treatment of interest as a charge or appropriation. In such case, we have two situations. In first situation, we have if loss given during the year of the firm. In case of loss, no interest will be allowed to the partners. In second situation, in case of profit. In case of profit, we have two further situations. In first situation, if profit before interest are sufficient, it means profit amount is equal to the amount of interest or more than it, then full interest on capital will be allowed at agreed rate. But in second situation, if profits before interest are insufficient, it means profits are less than the amount of interest on capital, then interest is allowed only to the extent of profit in the ratio of interest on capital of each partner. Case number 3, when the partnership deed says interest on capital is to be provided as a charge. In that case, full amount of interest on capital is allowed whether there is a profit or loss to the firm. You always remember that when partnership deed is silent upon the treatment of interest on capital, it is treated as appropriation of profit and it will be paid to the partners only if the firm earns profit during the year. Let us discuss the above said cases with the help of some examples. Suppose A and B are partners sharing profit and losses in the ratio 2:3 with a capital of rupees 2 lakh and rupees 1,50,000 respectively as on 1st April 2019. Show the treatment of interest on capital for the year ended 31st March 2020 in each of the following cases. Case number 1. The profit for the year is given rupees 50,000 and the partnership deed is silent as to the interest on capital. In that case, no interest will be paid on capital because partnership deed is silent given. In that case, we prepare our profit and loss appropriation account just like that. First we write on the credit side by profit and loss account, that is 50,000 because here profit is given, and partnership deed is silent about the interest on capital, so we not allowed any amount of interest to the partners. It means 50,000 will be distributed A and B in their profit sharing ratio, that is 2:3, means we divide 50,000 in 2:3. A receive 20,000 and B receive 30,000 and close the both sides. Second case, the firm incurred a loss during the year rupees 30,000 and the partnership deed provides for interest on capital at the rate 8% per annum. Here it is clearly given about the interest on capital in partnership deed. But as we know, in case of loss, no amount of interest will be allowed to the partners. So we not give any amount to the partners in form of interest. Second, you always remember, if there is loss, then we should not prepare profit and loss appropriation account. We prepare profit and loss account. Look it. On the debit side, we show loss for the year or balance brought down. This loss will be divided between partners in their profit sharing ratio, that is 2:3. We divide 30,000, out of which A receive 12,000 and B receive 18,000, close both the side, that is equal to 30,000. You always remember this thing in your mind. When there is a loss and profit is a appropriation, then loss will be divided between the partners in their profit sharing ratio because no amount of interest will be allowed. Case number 3, if partnership deed provides interest on capital at the rate 6% per annum and the firm earned a profit of rupees 36,000 during the year. As we calculate our interest in previous case, we look on capitals. A contribute 2 lakh, B contribute 1,50,000. At the rate 6% per annum, interest will be 12,000 and 9,000. Total interest will be 21,000 and profit is 36,000. It means profit is more than the amount of interest on capital. In that case, we allow full amount of interest and balance, that is 15,000, will be divided between the partners in their profit sharing ratio, that is 2:3. Case number 4. If partnership deed provide for interest on capital at the rate 6% per annum and silent about the treatment, and firm earned a profit 14,000 during the year. Here silent means it is not clear interest on capital is a charge or a appropriation. In that case, we first calculate our amount of interest on capital, which is on A capital 12,000, on B's capital 9,000. Total interest will be 21,000, but profit is given 14,000. It means profit are less than the amount of interest on capital, but because profit is given, it is compulsory for us to give interest on capital. But as per the rule, we allowed only interest up to the amount, up to the profit available. That's why we divide this amount in their interest on capital ratio, that is 4:3, and A will receive in form of interest on capital 8,000 and B will receive as of interest, that is 6,000. Interest on capital is an appropriation of profit. That's why we distribute profit up to the amount available with us. We have one more example. If partnership deed provides interest on capital at the rate 6% per annum and interest is a charge as per deed, and the firm earned a profit 14,000 during the year. The difference between previous case and in this case is that in previous case silent word is given, but here interest is a charge. When interest is a charge, then we allow full amount of interest, whether there is a profit or loss to the firm. In this case, we distribute full amount of interest, that is to A 12,000 and to B 9,000. When we distribute 21,000 as interest to A and B, but profit available 14,000, the firm occur a loss of 7,000, which will be distributed between the partners in their profit sharing ratio, that is 2:3. Here one more thing you remember, we once again prepare profit and loss account instead of profit and loss appropriation account, because interest on capital is given or treated as a charges against profit. When interest on capital given as charges against profit, then we always prepare profit and loss account in place of profit and loss appropriation account. Now I think you know all the methods, all the cases regarding the interest on capital. Now we want to know what is the treatment, what is the accounting procedure to record interest on capital in journal. In case of interest on capital, we do two entries in journal. First, interest on capital account debit to partners capital or current account. Capital we can use when capitals are fluctuating, means there is no change in capital during the year. Current account will be used only when capitals are fixed. In case of fixed capital, we prepare two accounts, that is capital account and partners current account. In first entry, we allow interest to the partners. In second entry, we transfer interest on capital to the profit and loss appropriation account at the end of the year, and entry will be profit and loss appropriation account debit to interest on capital. You can write one single entry in place of these two entries, that is profit and loss appropriation account debit to partners capital or current account. Now I think you all are able to calculate your interest on capital in given different situations. So let us start to do practice with some more examples which are available in your books. Thank you. Have a good day. Stay blessed. Keep smiling. Thank you.